Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the British pound, its recent slide back below 128, the upcoming Bank of England meeting, and also going to take a deep dive into the state of UK GDP, inflation, as well as historical prices around the pair. A lot to cover here on pound dollar. Let's start with the recent price action. 5 days in a row lower for this pound since it topped out above 128.50, went for a run towards 129 before backing off of year-to-date highs there. And since, it's been a pretty much nonstop slide all the way back down close to 127 now, more than 100 pips lower from its highs, the pound is. And now, in the grand scheme of things, we're going to take a wider look at multiple years of data in this pair. In the grand scheme of things, you might know that the pound is one of the strongest major currencies against the dollar in the last couple of years amid the run-up in inflation, the run-up in interest rates globally. And now a lot of economies are looking at lowering interest rates. More on that in just a second for the UK in particular. With this strength in the pound, it could also be one of the most vulnerable major currencies against US dollar, could potentially, as they say, have the most to lose if some of the weakness that we've seen in Australia or Japan, some other global economies, seeps into the UK, and they've already seen some of that weakness that we'll get to in a second vis-a-vis GDP. But first, the interest rate story, and no coincidence that the pound has been one of the stronger major currencies relative to the yen, relative to even the euro in recent years versus the dollar. The Bank of England hiked interest rates all the way up beyond 5%. And I think it's just the Bank of England and the Bank of Canada of the major central banks globally that got to 5% or more. And of course, the U.S. is at 5.25% to 5.5%. They're at the top of major global economies in terms of interest rates. Thus, the U.S. dollar strength we've seen the last couple of years. But the Bank of England is meeting on the 21st, and the question becomes, are they going to start looking at rate cuts? Fed Chair Powell in the U.S. has already talked about how they're looking at cuts here in 2024. It's also been in the water, so to speak, in Australia, Canada, the Euro area, other major economies. And keep in mind, this is a 16-year high for the Bank of England, very high interest rates there above 5%. And, the U.S. has had this sticky inflation and also outperforming GDP and employment data that has stuck around the first few months of 2024 that has kind of pushed off the interest rate cuts that were priced in. It's not been the same story in the UK in terms of economic data. Actually, in the technical recession territory for the UK, as they've had the last two quarterly GDP readings have been negative, and actually, given the last year-over-year GDP reading, as you can see there, the first negative GDP growth that they've seen in the UK in the last couple of years. And so a tough environment to make a case for keeping interest rates beyond 5%, keeping interest rates at 16-year highs, given that the economy seems to be slowing from a GDP perspective. Inflation is the piece that's kind of keeping these interest rates high and would be the case for keeping them higher for longer, as that's been sticky at 4%. But UK inflation data is set to come out very soon. That's expected to be actually not only in the 3 handle, but 3.5%. So it's supposed to drop pretty precipitously. And now the question becomes, is it too late for the Bank of England to kind of have this slow, soft landing that everybody is hoping for in the U.S. and everybody's hoping for everywhere that they've had to raise interest rates in recent years, because you already got the negative GDP growth. And if inflation falls, down to the 2% target and beyond quite quickly, and interest rates are still up near or beyond 5%, this economy could already be slowing before the data comes out and the central banks finally say, oh, okay, we're going to cut rates now. So really interesting point here, definitely an inflection point to see if the Bank of England will start to cut before they see inflation technically at 2%, given that other economic signs are pointing towards slowing. What does this mean for the pound and the dollar? Well, we'll see where it goes from here, kind of mid-range for the last couple of years. In the last couple of years, pretty much since the pandemic, let's say, if you've been trading since then, the high in pound has been around 140, the low has been around 110, and so could fall, realistically down to 120 or even 110 given recent historical prices. But if you go back in the last decade, this is a market that's been as high as 170, and of course, you might think that would occur if the U.S. economy slips harder and faster than the UK, or if there's a resurgence in both, but the UK really sees that resurgence more than the US, that would be the case for the long side. Clients at IG are pretty split. This is pretty close to 50-50 long versus short, and sometimes we'll look at the client sentiment, it'll be 65, 70, 75% and beyond in one direction or the other. 54% of pound dollar traders are long, which, like I say, pretty even split. And this is a market that's pretty middle of the range and kind of sets up for potential, whether you like being long pound and some of this UK data or short it and long the US dollar. A lot on the table going into the Bank of England meeting for March. And then plenty more data and meetings to come throughout the rest of 2024. Pound versus dollar will definitely be a hot major pair to watch.